Hello, and welcome to Boni's Life. In today's episode, we are embarking on a deep and insightful journey into the crypto market's performance in January 2025. This is not just another market recap. We are going to dissect the intricate movements of the market, unravel the complex interplay of global events, and provide you with an unparalleled understanding of what truly moved the markets and why. We will explore the fundamental and technical drivers behind the price action, and I will give you my analysis on the best projections we made in January. We will also calculate the potential profit or loss from a hypothetical $100 investment in key assets. This episode is designed to be the most comprehensive and insightful analysis you will find anywhere, surpassing the information provided by even the most esteemed institutions and crypto channels. So if you are ready to gain a true intellectual edge in the crypto market, stay with me. Let's begin with a panoramic view of the crypto landscape in January 2025. The total cryptocurrency market capitalization fluctuated within a range of $3.23 trillion and $3.72 trillion, a testament to the market's vibrant yet volatile nature. Bitcoin's dominance stood firm at 57.3%, while Ethereum held 11.8% of the market share. These numbers, while seemingly straightforward, tell a story of a market in a state of consolidation, a market that had just experienced a significant surge following the election of a new US administration and was now catching its breath, waiting for the next catalyst. Now, let's zoom in on the king of crypto, Bitcoin. January was a month of resilience for Bitcoin. It entered the month at approximately $93,500 and concluded at around $102,400, marking a respectable gain of about 9 to 10%. However, this journey was anything but a straight line. The price oscillated between a low of around $92,000 and a high of nearly $105,000, a clear indication of the ongoing battle between bulls and bears. This volatility was not random noise. It was a reflection of the market processing a whirlwind of fundamental and macroeconomic developments. One of the most significant fundamental drivers of January was the pro-crypto stance of the new Trump administration. On January 23rd, President Trump signed an executive order titled Strengthening American Leadership in Digital Financial Technology. This was not just a symbolic gesture. The order established the president's working group on digital asset markets, a high-powered committee tasked with developing a comprehensive regulatory framework for digital assets. This move was a clear signal to the market that the US was serious about embracing and leading the digital asset revolution. The order also included a directive to evaluate the creation of a national digital asset stockpile, a concept that, if realized, could have profound implications for Bitcoin's status as a strategic reserve asset. The Federal Reserve also played a crucial role in shaping market sentiment. On January 29th, the Fed decided to hold interest rates steady, a move that was widely anticipated. However, it was Fed Chair Jerome Powell's dovish commentary, suggesting that inflation was expected to continue its downward trend, that provided a tailwind for Bitcoin and the broader crypto market. The prospect of a less aggressive monetary policy from the world's most influential central bank is always a bullish signal for risk assets like cryptocurrencies. Institutional interest in Bitcoin also continued to grow. A notable event was the acquisition of a 3% stake in the Bitcoin mining company Cypher by SoftBank's Masayoshi Son on January 31st. This move by one of the world's most influential tech investors underscored the growing convergence of Bitcoin mining and the high-performance computing demands of the artificial intelligence industry. This strategic integration is a powerful narrative that further solidifies Bitcoin's position in the evolving digital economy. From a technical perspective, Bitcoin's price action in January was a classic example of a market consolidating within a defined range. The strong support zone between $85,000 and $90,000 held firm, providing a floor for the price during periods of selling pressure. The key resistance level to watch was $108,000. A decisive break above this level would have signaled a continuation of the uptrend and opened the door to higher price targets. We also saw a doji candlestick pattern form at the $108,353 level, a sign of indecision in the market that often precedes a reversal or a period of consolidation. So, what if you had invested $100 in Bitcoin at the beginning of January? With an entry price of around $93,500, your $100 would have bought you approximately 0.001070 BTC. By the end of the month, with Bitcoin trading at $102,400, your investment would have been worth around $109.60, a respectable profit of $9.60, or a 9.6% return. This demonstrates the potential for solid gains even in a market that is not in a full-blown bull run. Now, let's turn our attention to Ethereum, the world's second largest cryptocurrency. January was a challenging month for Ethereum. While Bitcoin was posting gains, Ethereum's price actually declined by about 1%, falling below the critical $3,000 level in the early part of the month. This underperformance relative to Bitcoin was a continuation of a trend that we have been observing since 2022, with the ETH-BTC ratio in a persistent downtrend and approaching its historical lows. The reasons for Ethereum's weakness are multifaceted. One of the key factors is its failure to capture the major narratives that have been driving the crypto market in this cycle. The explosive growth of meme coins and the hype around AI-powered agents have largely bypassed the Ethereum ecosystem. Furthermore, internal conflicts within the Ethereum Foundation have become public, creating a sense of uncertainty and instability around the project. And perhaps most importantly, Ethereum has been losing ground to its competitors, most notably Solana, in several key metrics. However, it's important to remember that in the world of investing, weakness can also be an opportunity. Some savvy investors, like World Liberty Financial, have been accumulating Ethereum at these depressed prices, viewing it as an attractive long-term investment. As of January 24th, they held a massive position in Ethereum, a clear vote of confidence in the platform's future prospects. From a technical standpoint, Ethereum's price was trading below its 20-day and 50-day exponential moving averages, a bearish signal. The key support level to watch was $2,923. A break below this level could have led to a more significant correction. On the upside, a break above the $3,500 resistance level was needed to signal a reversal of the downtrend and open the door to a potential target of $3,746. If you had invested $100 in Ethereum at the beginning of January, with an entry price of around $3,100, your investment would have been worth approximately $99 by the end of the month, a small loss of $1 or a negative 1% return. This highlights the importance of asset selection and the fact that not all cryptocurrencies move in the same direction at the same time. While Ethereum was struggling, another blockchain was emerging as the undisputed leader of the Layer 1 space, Solana. January was a breakout month for Solana, with its price surging by an impressive 18 to 19%. This stellar performance was not just a speculative frenzy, it was backed by a dramatic improvement in its fundamental on-chain metrics. In January, Solana's revenue was greater than the combined revenue of the next four largest blockchains. It captured 45% of the decentralized exchange volume market share and 33% of the daily active wallets market share, with an average of 6.3 million daily active users. If these numbers were to be extrapolated for the entire year, Solana would be on track to generate an annualized revenue of a staggering $6 billion. One of the key catalysts behind Solana's explosive growth was the launch of the $Trump token. This meme coin, tied to the sitting US president, brought a massive influx of new users to the Solana ecosystem. In fact, 46.5% of the wallets holding the Trump and related tokens were newly created, a clear indication of the token's ability to attract new participants to the crypto market. The Trump token also served as an informal approval rating of the president's pro-crypto policies, with its market capitalization acting as a barometer of sentiment within the crypto community. If you had invested $100 in Solana at the beginning of January, with an entry price of around $200, your investment would have been worth approximately $118 by the end of the month, a handsome profit of $18, or an 18% return. This demonstrates the immense potential for outsized gains in the altcoin market, especially when you can identify the projects with strong fundamentals and a compelling narrative. The altcoin market as a whole presented a mixed picture in January. While some like XRP, which rallied by an impressive 45.9%, and other layer ones like Hedera, Algorand, and Cardano posted solid gains, others lagged behind. The much-hyped AI agents sector, for instance, had a bearish month, with its total market capitalization dropping by 44%. This was a classic example of a narrative that had run its course, with many projects failing to deliver on their promises and turning out to be little more than meme coins with an AI wrapper. This brings us to a crucial point about the current state of the crypto market: the increasing concentration of liquidity in established winners. The top 6 smart contract platforms, Bitcoin, BNB, Solana, Tron, Toncoin, and Sui, have increased their combined market share from 71% to 82% of the total smart contract platform market cap. This is a clear indication that investors are becoming more discerning and are allocating their capital to projects with robust fundamentals and a proven track record. The days of indiscriminately throwing money at any new project with a flashy website are over. In today's market, you need to do your homework. Now, let's delve deeper into the technical triggers that could have guided your trading decisions in January. For Bitcoin, the key levels to watch were the support at $96,000 and the resistance at $108,000. A break below the support would have been a bearish signal, while a break above the resistance would have been a bullish one. The doji candle at $108,353 was a clear signal of indecision, a point where traders could have taken profits or tightened their stop losses. For Ethereum, the critical support was at $2,923. As long as the price remained above this level, there was hope for a recovery. A break above the 50-day exponential moving average would have been a bullish confirmation. For Solana, traders could have used a breakout strategy, buying as it broke through key resistance levels, capitalizing on its strong momentum and on-chain fundamentals. So, what are the key takeaways from our analysis of the crypto market in January 2025? First, Bitcoin has once again proven its resilience, outperforming major indices in the face of market volatility. Second, Ethereum is facing significant challenges and is at risk of losing its position as the leading smart contract platform. Third, Solana has emerged as a dominant force in the Layer 1 space, driven by strong fundamentals and a vibrant ecosystem. Fourth, the regulatory landscape is becoming more favorable for crypto, with the US government taking a more proactive and supportive stance. Fifth, institutional adoption is accelerating, with major players like SoftBank entering the space. And finally, the market is becoming more mature and discerning, with capital flowing to projects with real value and a clear path to profitability. As we look ahead, the crypto market is poised for another exciting year. The trends that we have identified in January are likely to continue to shape the market in the months to come. The battle for dominance in the Layer 1 space will intensify, the regulatory landscape will continue to evolve, and institutional adoption will continue to grow. For investors, this means that there will be both opportunities and risks. The key to success will be to stay informed, to do your own research, and to make decisions based on a sound understanding of the market dynamics. Let's now expand on these key areas, because the devil and the profit is always in the details. The surface level numbers are just the beginning of the story. To truly understand the market, we must look at the undercurrents, the subtle shifts in sentiment, and the complex interplay of technology, politics, and human psychology. The market's consolidation in January was not just a pause, it was a period of intense recalibration. Investors were digesting the implications of a new political reality in the United States. The Trump administration's victory had ushered in a wave of optimism, but now the market was demanding concrete action. The executive order, strengthening American leadership in digital financial technology, was the first major step in this direction. The establishment of the President's Working Group on Digital Asset Markets, comprising the heads of the most powerful financial and regulatory bodies in the country, signals a coordinated and serious approach to crypto regulation. The most tantalizing part of the executive order was the proposal to evaluate the creation of a national digital asset stockpile. A national stockpile potentially derived from seized cryptocurrencies would be a monumental step towards legitimizing Bitcoin as a strategic reserve asset on par with gold. It would be a tacit acknowledgement from the world's largest economy that Bitcoin has a role to play in the future of finance. This is a narrative that has been circulating in the crypto community for years, but to see it being officially considered by the US government is a game changer. The institutional embrace of Bitcoin was further solidified by Masayoshi Son's investment in Cypher. This was a strategic move by a visionary investor who sees the deep synergies between Bitcoin mining and artificial intelligence. The AI industry is facing an insatiable demand for energy and computing power. Bitcoin miners, with their specialized hardware and access to low-cost energy, are perfectly positioned to meet this demand. The convergence of these two industries could create a powerful flywheel effect. For Bitcoin, the support zone between $85,000 and $90,000 was a level where there was a confluence of buying interest, a point where long-term investors were willing to step in and accumulate. The resistance at $108,000 was a level where there was a concentration of selling pressure. The doji candle that formed at this level was a visual representation of this battle between buyers and sellers. For Ethereum, the technical picture was far more bearish. The price was trading below its 20-day and 50-day exponential moving averages, which are key indicators of short-term and medium-term trend. The ETH/BTC chart was in a clear downtrend, indicating that Ethereum was losing value not just in dollar terms but also against its main competitor. Solana's rise was the culmination of years of development and a relentless focus on performance. Solana's core innovation, proof of history, is a cryptographic clock that allows the network to order transactions without the need for constant communication between nodes. This results in a significant increase in speed and a reduction in cost compared to Ethereum. The story of the altcoin market in January is a tale of two cities. On one hand, you have the established players like XRP, which saw a massive 45.9% rally, driven by positive developments in its legal battle with the SEC. On the other hand, you have the speculative narratives that came and went, like the AI agent sector. The 44% crash in this sector is a cautionary tale for investors who are prone to chasing hype. A successful trader in January would have been paying close attention to the political developments in the US, the statements from the Federal Reserve, and the on-chain metrics of the major blockchains. A trader could have used the executive order as a long-term bullish signal for Bitcoin and started to accumulate a position. For Ethereum, a savvy trader would have been more cautious. For Solana, a trader who was paying attention to the on-chain data would have seen the explosive growth and would have been looking for opportunities to go long. This is the kind of multifaceted analysis that is required to succeed in the crypto market. It's not about finding a magic indicator or a secret formula. It's about doing the hard work of research and analysis, and it's about having the discipline to stick to your trading plan. This brings us to the end of our deep dive into the crypto market's performance in January 2025. I hope that this analysis has provided you with a clear and comprehensive understanding of what moved the markets and why. I also hope that it has given you the intellectual tools you need to navigate the exciting and ever-changing world of cryptocurrencies. Remember, knowledge is power, and in the crypto market, it is the key to unlocking your financial freedom. Thank you for joining me on Boni's Life. Don't forget to like, subscribe, and hit the notification bell to stay updated on our latest episodes. Until next time, trade smart and be well.